Good day, guys. I hope we are all good. I just came back with our new book as promised. This is BTMM versus ICT. So this book is good for those who are studying BTMM, which is Beat the Market Maker by Steve Mauro. Then this is also good for those who are studying ICT by Michael Haru Stone. I'm not sure if I got the name correct here. Let me quickly check so that I can correct myself. But you see the salutations are also there on the book. So all good, all good. This book is by Mr. Omoemo Festus FTS. I'm sure some of you guys already know the guy. Who also have his links down below. So this is the book we'll be going through. It's just 20 pages. So I hope you guys enjoyed it. It's also good for a beginner trader. Uh, and we'll just try to keep it as simple as possible. I also would recommend this book as well for somebody who's starting. So we're just going to get started. So disclaimer, I'm not a financial advisor, neither do I work with any registered financial institution. This material, BTMM versus ICT, is for educational purposes only. Past profits does not guarantee future results. No strategy is a holy grail. Trade at your own risk. Right, about me, this is just a brief rundown about the author. Okay, let me just which color we going? Okay, there we go. About the author, my name is Festus Omoemo. I hope I'm pronouncing this right. My name is Festus Omoemo at FTS Pips on Telegram. This is still his handle. So if you guys want to get in touch with the author, this is his handle, his Telegram handle. A Forex trader from Nigeria. Okay, I don't know why it keeps asking me to do this. Right, a Forex trader from Nigeria who has created over 6 strategies and they've been in the market for some time. I've been privileged to come across two powerful and outstanding Forex trading methods, the BTMM with the market maker by Steve Mauro, like I mentioned earlier. Also, if you want to look up this guy, you can also check him out on YouTube. He's got his own channel, great following, great mentor, great teacher, great trader. You can also check him out. And the ICT Inner Circle Trader by Michael J. Huddleston. Okay, this is ICT as well. If you want to check him out, you can check him out on his channel. He's got some great, great, great top-notch content as well. Acknowledgement. I want to use this means to acknowledge Ronaldo, who is a mentor, and he trades BTMM and ICT combined. And this is proven consistent over time. I also want to use this means to acknowledge the members of my Telegram family, aka FTS Wealthy Club, who have believed in me and we have worked together as a team and evolved over time. Brief key information about the Forex market. We all know that Forex is knowing when to buy and when to sell, when to enter and exit the market. Many don't have an ideal how the Forex market works. They just rush without proper understanding of the market and they lose their money. And many are yet to see the bigger picture of the market. Forex is more than identifying support and resistance. Forex is 50% winning psychology, 20% strategy, and 30% management. 90% of Forex traders are greedy. That is why they blow their accounts in one time. The trading psychology includes greed, fear, patience, confidence, and discipline. Once you have conquered these, you have a successful trading career. Okay, let me just look now. Okay, no worries. Forex is not a get rich quick business. In Forex, you learn to grow your account. In Forex, every strategy is a good one and none is bad. You just have to stick it with the rules and you make money. In Forex, you lose and you win. Many losses in Forex comes from bad risk management and greed. What is the market? If you have gone through Steve Mauro's BTMM course, you understand the Forex market and you get a first-hand information about the market. Every retail trader is up against one man known as the market maker. That is the institutional traders. They provide the financial liquidity for the Forex market and they control the market. The Forex market is manipulated by one man or group of men, aka the market makers. According to Steve, his sole aim is to collect contracts, hit the stops of the retail traders, and go in the opposite direction. Camo, a South African trader whom I came across recently, opened my eyes to how the market makers operate. He went further to explain that the market maker is a guy or bunch of guys who is or are paid to collect volume where liquidity is found. So each time we mention volume, that's where the liquidity is. He only targets places with higher volumes, where the higher volumes are, and he collects them. He induces traders to buy or sell and trap them and stop them out. Okay, let me just highlight this. I have little knowledge of the ICT, but it's another powerful strategy that is equal to the BTMM. They're a group of traders who trade naked charts. They have their own trading terminology, just like BTMM, and their own bunch of indicators. They have a branch of the ICT that agrees with the BTMM about institutional traders, which has to do with collecting contracts in form of volumes, hit the stops, reverse the market. They have signature trade setups too. Knowledge is what drives the Forex market from the retail trader perspective. If you have the right kind of knowledge, the Forex market will be easy for you to trade and the losses will be minimal. In Forex, good entry is key. You target where the volumes are and you trade with the institutional traders because they collect volumes. A combination of both the BTMM and the ICT has proven to be a consistent way to profit from the market. Before I continue, I want to point out something profound that Mr. Kamo said. He said MM collects volumes and they trade traders. Volume is where the monies are. Once you identify where the volumes are, you identify where the market maker trades from and you trade with them. As a trader, we can't see volume, but we know where it's found. And also, there are two things that the market maker can take away from us. He can't give us a fake shark fin, which is a TDI confirmation where the volume is. Trapped volume can be identified with pins from the bottom and pins from the top area on consolidation accumulations. Yesterday's high, yesterday's low, weekly high, weekly low, monthly high, monthly low. So these are just abbreviations. This is yesterday's high. This is yesterday's low. This is weekly high. I'm sure they made a typing error. This is weekly high. This is weekly low. This is monthly high. This is monthly low. So these are areas which we target in terms of looking for setups, because that's where most of the volume lies. Note that volume is found at the high or low of the session. So these are the main notes you need to like jot down. So if you are day trading mainly, you should know that your volume is found at the high or low of the day, right? It's also found at the high or low of the week. It's also found at the high or low of the month, at the high, excuse me, or high or low of the year. Never ever forget this, right? Also note that the higher the time frame, the higher the volume, right? I pointed this out because of where we can identify volumes as a trader. We trade only from those areas. In order to catch these volumes, we focus our setups on the daily high and low. Yesterday has a high and yesterday's low. Weekly high and weekly low. Monthly high and monthly low, because this is where the volumes are found. We also focus on the pattern using the BTMM, that is the WVVM and the MAAW, using order blocks as a sniper entry on the lower time frame, that is M15, and other confirmations from H4. Right. So before we proceed, what the author is trying to say here when he says WVVM or MAAW, usually price moves, if it's a trending market, price will move like this. So from a W pattern, so we're saying this is potentially the low, can be the low of the week, low of the day, low of the month, low of the year. Once you get a W, what price will do is they will pull back, right? Create a V, pull back, create a V, before they create an M at the top. Then from the M, okay, let me just do this example here. So we said we've got a W, right? Then price starts creating higher highs, higher lows. Then once the cycle is complete, price will reverse, create an M, starts creating A's, A's, then eventually it's going to create a W and it will reverse. This is like the general cycle of how price moves. So if you zoom in, like if you went through some of our sessions with the candlestick trading Bible where we're talking about the trend, basically it's a trend. This trend can happen during one day as a cycle for that particular day, or it can happen during the course of the whole week, meaning for you to see this, you need to be on the H1 time frame for you to be able to see this as a weekly move. So this might happen Friday, Monday, then this will be Tuesday, Wednesday. Then from Thursday and Friday, the price will actually be reversing. Then as we enter the new week, price will just simply start creating lower highs, lower lows, lower highs, lower lows. And this is more visible on H1, mainly if you are looking at the weekly pattern. But intraday, like during the day, you might see this pattern as well, which is on the M15 or M30 time frames. You might see it happen maybe in the morning or during Asian. Then London session pushes, New York gives a continuation, and it will close in consolidation before the next day reverses. So I'll try to jump into examples so that you can understand these cycles. This is just like the basics of how price actually moves. So let me just do a quick new share, jump to, let me share my whole screen so that we don't have an error of not viewing something. So this is GBP NZD. Okay, I want to look for somewhere where there's a clean pattern. Okay, for example here, if you notice here, can I zoom in here? But I'm sure you guys can see. So if you notice here, we're just going to start where we can all see. And this is not to say that price moves like this always. There are times when it moves like this. There are times when it's just moving haphazardly. That's what you should also notice. But if you see the patterns, so we've got a W forming, right? Price pushes up, creates a V, another V. Then at the top, creates an M, an A, an A. This action happening here, there will be something called a trend reset. I'm not sure if the author touches on it, but this is when instead of price reversing and starting to push up, they will just give you one leg of push up. Then they won't break any zone at the top here. Sometimes they might, but then that cycle will repeat going to the downside, especially when the trend is strong, right? So I hope this is clear. This is just like an overview, right? So you got your W, you got your V, you got your V, and you got an M. So usually on these V's, if you're going up, that's where the stop hunts happen. And if you're coming down on the A's or on the A patterns, that's when the stop hunts happen. So here coming down from the M, this is our M at the top here, right? First leg. Here you can see we go sideways, but then we come up, then we drop, we come up, we drop, we come up. This is a small M. Then from this area here, this is where we hit the same level. Notice how it takes about 3 days for the price to eventually form a V. So it takes screen time and it takes understanding for you to understand this pattern. So usually once you get an M, it's just an idea or a clue for you to know that you're now trading going the other direction. But again, there's many things to be explained. You don't just see an M and then take a sell, because sometimes there's something called failed patterns. That's when sometimes you see an M, you might think price will sell, then they'll start still pushing up, violating this. So with time, with screen time, with practice, back testing and forward testing, all these things will become a bit more clearer. So that was just like an overview to explain to you guys the definition of this WVVM and MAAW. And this is specifically for those who trade using BTMM, or Beat the Market Makers by Steve. So an order block is an ICT. Okay, let me rephrase. Order block, an ICT sniper entry will give you a good entry from where those volumes are on H4 time frame and M15, right? These are, okay, I want you to just excuse me as I try to highlight the most important parts here. Okay, order block and ICT sniper entry will give you good entry from where these volumes are on H4 and M15. Things we're going to be talking about are as follows. So these are, throughout this book, we'll just be talking about these things. Things we'll be talking about are as follows. We've got order blocks, how to draw an order block, time frames, what are the confirmations, that is AMW, S and H, that's your head and shoulder type pattern. So it's the shoulder, head, shoulder pattern on M15 and H4. Quarter points or quarters theory, that is hesitation points and whole number points. TDI confluence, such as the shark fin, blood on water, etc. This is BTMM. Okay, so this is ICT, how to draw an order block. That's ICT. Time frames, that's all round. Confirmations, which are AMs, Ws, head and shoulder patterns. This is price action. Quarter points, this is the quarters theory, and it's usually used sometime. Mostly I see BTMM guys, but I also see other guys using price action, using the quarter points or quarters theory. So I'll classify this under price action, right? TDI confluence, this is BTMM. TDI divergence, that's also BTMM. Multi-session, M's and W's, this is also BTMM. So you can see how the author is combining ICT methods and BTMM methods, right? So we'll go into these as the author. I think the author explains them as well. So let's see what he says. The combination of BTMM and ICT is a simple strategy. Don't be scared of things are listed above. Once you understood the listed points above, you do very well on this strategy. With this strategy, you only trade outside. You only trade outside the range of yesterday's high and yesterday's low on M15 after a peak formation high or low. Look for multi-session M and W on M15 entering using order block or other confirmations, right? So let's see what the author is trying to say. So before we get into it, I'm just going to switch again back to this. And let me open. Okay, let's open GU. Okay, this is GU. You can see prices all over the place here. But anyways, what I want to explain on this particular chart, I'm going to go to M15. Mainly the author uses M15 and H4. And during the course of the book, I'll explain the relationship between these two time frames. So let's go to M15. As you can see, this is for people who love to use indicators. So these are indicators here compiled into a template. Okay, just pardon my my MT4 platform here. It was just taking time to load. Okay, so what you see from this template on the bottom, you see the TDI indicator. TDI is just like an advanced version of the RSI or relative strength index on the bottom. We only use it to confirm what we are seeing on the charts, right? We only use the TDI for confirmation. That's one thing I want to stress out. What else do we have on the charts? So this indicator comes with these things. If you look closely, I'm not sure if I should zoom in or what, but anyways, let's just focus on this particular area. Okay, just hold. Let me take this. All right, sorry about that, guys. Okay, let me just finish this. Okay. All right, so let's just look at this part, right? So what we have, we've got the TDI. What we have with this indicator or template, you also, it shows you the previous day's low. So this was this day's low. It will show this blue tracer here. And on the previous day's high, it will also show this blue tracer here. So what the author is saying is we are mainly looking to trade from yesterday's low. We're mainly looking to buy. That's where liquidity is, right? And if we're selling, we're also looking to sell around this area. What we also have is the BTMM moving averages, which is the 13 EMA, the 50 EMA, the 200 EMA, and the 800 EMA. What we also have is the Asian session. So this template, it comes with all these indicators which I'm explaining. So this is your Asian session. This is the London session. This is the New York session, or the change, the switch over between London and New York. And this is the end of the day, starting a new day. Then you've got these arrows here, or these points. This is your peaks. So with the peaks, you see there's one which will show a big one. Then sometimes you see the tiny ones, So you want to mainly trade from the big peak, especially if it's from a weekly view. But on a daily view, yes, it can be used. But you should know that these arrows or this indicator, it repaints. What I mean is, if this low is here and if this price decides to extend and create a new low, it means this indicator will move from here to here. So it repaints. It's not like it will stay there forever and it's the holy grail. You should just understand what price is moving. This just guides you on what to look for, right? So I hope that part has been explained clearly. So as you can see, the author also explains trade mainly outside the blue tracer into the blue tracer, which is yesterday's high and yesterday's low on M15. For example, you can see once you see the tracer, you don't even need to see what the price is on the left, right? You know, okay, this was yesterday's high and this was yesterday's low. So what am I looking for? There is my peak. My indicator is painted a peak. Then I think the author will explain the order blocks as well. Then you execute your trade. So when it says trade mainly outside the blue tracer into the tracer, it simply means that once your price is around yesterday's high, around this area, that's where you look for a sell setup. And once you execute, get a nice sell trade there, as you can see. So guys, I hope this is making sense. If you've got questions, it's either you hit me in the comment section or you can directly get in touch with the author of the book. His link, Telegram link, will be on the description just below on this video. All right, so as you can see, there's your TDI, yesterday's low, yesterday's high, the peak, the moving averages. The only thing I don't see here are the sessions, but nonetheless, everything is there. Excuse me. Not if you can't get a trade set up in London session, you definitely find a trade. Excuse me, you definitely get moves in the New York session. Then we've got a list of indicators. We've got the quarter points or quarter theory. This is to identify both the hesitation quarter points and the whole number quarter points. I'll explain this just now. We've got the TDI to identify the shark fin, both hidden and regular divergence. Also explain this one. We've got the EMAs, the 5, the 13, 50, 200, 800. Personally, I don't use the 5. If you've noticed on my chest, there's no 5 EMA. But I've explained this one. And this is to determine the trend and for entries, confirmations, take profit and stop losses. Then we've got the ADR marker. ADR stands for average daily range. So I'll still explain this as well just now. So let's see, daily, weekly, high. Okay, fine. So let me explain all these quarter points, TDI, EMA, and ADR. So what is a quarter point? A quarter point, if you come back to the charts, I'm going to just change the time frame and go to a higher time frame so that the quarter points can be visible. A quarter point is basically like a whole number when it comes to price. So let's say we are counting from number 1 to 10, and we've got a 5 here. We've got a 7.5 here. If we split it into 4, and we've got 2.5 here, right? So it means on number 1, there's a whole number. On number 5, it's a whole number. Number 10 is a whole number. Then on number 2.5, it's a midpoint. It's a point of interest, but within that 1 to 10 block, it's a point of interest, which makes it what, a hesitation point. Same applies to number 7.5. Okay, something like that. I might not be good with explaining this, but I'll try to show you the visuals so that everything can be a bit clearer. So let me drag this also, drag this. Okay, there is a whole number there. Okay, so for now, don't worry about the candles. I just want to mention the quarter points. So you see, this is a whole number here, 1.3000. That's a whole number, bold red line. 1.2000 is a whole number, bold red line. Then this is the halfway mark, 1.25, bold black line. This is also 1.2750, a bold black line. So now it's been split right into whole numbers. Then the hesitation points when it comes to this indicator, it's these blue lines, these dashed blue lines here. Those are what is called hesitation points, right? So you got your whole numbers, the red and the black, then the hesitation points are the blue lines. So if we are to jump back to M15 so that we can see price action clearly. Just hold on. I hope this session is not too long as well. This book has got 20 pages, so maybe we'll have only 4 sessions on it. I don't know. We'll just see how long each session will be, but let's see what we have here. Okay, I don't know what I did. Oh, I had stretched them out. I know these guys who hate indicators. They will be like, hey, what the hell is going on here? Anyways, no stress. I'll also explain this strategy on a chart with no indicators, so don't worry. You know, I got you guys. I got you. So, yeah, just trying to stretch this to the normal price. Okay, so on this buy here, which happened on Friday, did we have a hesitation point? No, we didn't. We want to look at Thursday, the 29th of Feb. Price came, created an M here. We've got equal highs. This is London session, right? We've got a peak and we have a hesitation point right there. So I'm just showing you an example of how you can use this. How you take profit now using the moving averages. Let me actually explain everything in one chart. So we explain the quarter points, right? The moving average is when the author says you are using the moving average to get your trend and to get your take profit. What it simply means is if you're selling from here or any point and you're trading towards a moving average, personally, I love to take my profits or scale out on a moving average. Same applies. Let's say you had bought this for some reason and you're trading towards the moving average. This is where you scale out, scale out, scale out. You get it. New York session starts again, same time, hesitation point. You've got your peak. TDI also has to give you a confirmation, right? Hesitation points, check. Peak, check. Do you have yesterday's high? That's also what you need to check. Do you have your order block? Check. Execute. TDI, is it giving you something? You need to either get a shark fin or you need to get a divergent setup. Those are all things which I'll touch up on different separate videos, which are specifically designed to explain those particular things. So that'll be a video on its own, especially the TDI, because there's so much to touch on. TDI shark fin, a video on its own. TDI divergence, a video on its own. So I hope that's clear in terms of explaining the quarter points, the TDI confirmation. What else needed to be explained? Let's see. We spoke of the quarter points, TDI, the EMAs, ADR marker. So what is the ADR marker? ADR marker is your average daily range. What I love about this template is if you look to the top left, you see where it says ADR 61. it shows the average daily range for today. It just calculates the average range for the past couple of days. Then it will give you an average range for the day. So this helps you to know that if you're selling or buying whatever trade you're taking, do not aim for 100 pips if your average daily range is 61. Rather aim for 30, 40, or maybe 50 because it's within the average daily range. So from the open price to this high, it's showing us that today they've only moved 35 pips. So again, if you look now to your right, there is this information. It shows you the current high of the day, the current low of the day. It also shows you the ask and bid price and the current spread of the pair you're trading. Some of these values I've never gone into them to actually make use of them. But what I love to see is my weekly low is at this price, my weekly high is at this price. My weekly range is here. So the week has just started. We're still within the same range, it's 35 pips. 3 times midweek range, it's 127. Some of these values I don't use, but what I love to use is just the ADR. So if you're catching a trade from a peak, or if you want to know whether the move is complete for the week, you want to work with average values. So when it says 3 times ADR, it's showing you the average range for the past 3 days. So you need to know this information, especially if you want to swing. You want to know the average daily range for the past 3 days. That gives you a framework to sort of work within for that particular week. Then if you're just using the ADR, it gives you an average framework for that particular day. So I'm going to open a different chart. Let's open GJ so that you can see that these values are different for each particular chart. Then after that, we can maybe do a few pages before we conclude this this session. So let's wait for the waiting for the chart to load. It takes forever. Okay, GJ, once we open GJ, look to your top left, see what information your chart is giving you. So if we look to the left, let's just wait for it to load. Oh my God, this is such a waste of time. But anyways, you see where it says today it's already moved. Okay, there we go, there we go, there we go. Average daily range on this one is 103 pips. Today we've already moved 95 pips from the open price. Right, we've already moved an almost complete range. So once the range is complete, what can most likely happen? All right. First thing, we've got the previous day's high, which is Friday's high. We've got the hesitation points, that blue line. We've got a peak. This peak might change depending with whether price decides to extend the high or not. So one other thing is this trade might also happen in New York because right now New York session will be starting very soon. I think in about almost 2 hours from now. So it might be a New York trade. Um, so you've got the average daily range. Once it's complete, you're looking for a reversal, right? So that's just like a clue of what might happen. For example, this day opened here, they pushed up, almost did the daily range for that day. And what happened? They reversed. A reversal might so it could be a reversal, it could be a pullback. So in this example, it was a pullback. Price didn't really get to these lows, you see. So this is where your multi-time frame analysis will come in. This is where all the other knowledge you've learned in trading comes in, because you cannot just take a trade because the average daily range for that day is full and you want to take a pullback. You need other confluences, your multi-time frame analysis. So just stay with me, because what I'm explaining is just based on what I'm reading here and what the author is explaining. I'm not trying to incorporate all the other Forex notes into the setup, right? So please do not get a bit lost here. So we're on page 5. Okay, let's see if I can touch into the order block. Okay, let's touch into the order block. But what I've noticed is people don't like to watch long sessions. So today's video is going to end here. All right, let me keep you interested. So we did from the cover to page 5. Tomorrow we're going to start from page 6 to page 10. Then the next day is page 11 to page 15, then 16 to end. That way, I think it'll be good for everyone. This book is available for everyone who wants it. If you want the original strategy, please get in touch with the author. His his Telegram link is on the description. If you want BTMM, the original, I'll leave Steve Mauro's YouTube channel on the description. You can get in touch with him. If you want the ICT original, you can go to the ICT channel or get in touch with the ICT guy, the original. Then you can learn from the originators of the strategies which I'm explaining now. So apart from that, I hope today's session was informative. It's just the basics to get started with. Then from tomorrow, we're going to start going to continue with this from page 6. So practice, mark your charts. If you need the BTMM template, I'll give it to you, but I'll still explain this strategy on the next videos on a naked chart where there's no indicators. It still works. You just need to know what you'll be looking for. So apart from that, good trading.